All right, I think we are live. Well, glad everyone is here to join us. First YouTube live, and I figured no better than somebody that I really respect in the industry, James Knull, is going to join us today, and we're going to dive into the real estate stats, what's going on in the current Vancouver real estate market here for the month of May. And James has about 20 years here in the real estate industry, leads a team in Vancouver as well as in Edmonton, and is a seasoned investor. So he knows real estate from all aspects and has accumulated almost 300 doors in his rental portfolio. So if you want to say a quick hello, James.
Hey, it's great to be here, Megan. I'm super excited to talk about the market. I know a lot of you out there are wondering what is going on. It's changed a lot in the last 12 months, and staying on top of it is going to make sure that you're able to make great decisions with what you want to do here in Vancouver.
Absolutely. So one of the things, like, we find the average person doesn't really care too much about the actual numbers. What you care about is how it affects you buying, selling, investing. So that's what we're going to dive into first here. And then for those of you, maybe true economists that do care about the numbers, don't worry, we haven't forgot about you. We're going to go through all the numbers, listings, inventory, everything like that that's here for the month of May. And then towards the end, the burning question that probably all of you investors or want to be investors are asking is, where are the opportunities in the market right now? Because we as seasoned realtors know that there's no bad market, there's only bad strategies. So it helps to understand the proper strategies for the current market. So let's dive into it, James.
Yeah, well put, Megan. Every market is a great market for someone with the right mindset. You know, you always hear the terms buyer's market, seller's market, balanced market. Well, hey, there's a market out there for you depending on where you are. So let's talk about what kind of market it currently is and which strategies are going to work for who you are.
Absolutely. So I guess the first question really is, maybe James, do you want to? I didn't put these in the proper order. I think
Well,
you
you know
had the
what? The
proper
question
order. Sorry.
the question I think we were thinking about is something that I hear all the time. And I know, Megan, you and I were chit-chatting about it earlier in the week, that you hear all the time, is there's a group of people out there who are in a wait and see mindset. They're just waiting for interest rates to drop. You
Yeah.
know, I think there's a conception out there that if you buy after interest rates drop, there's going to be substantial savings for you as a purchaser. And I want to unpack whether or not that's actually true, because, you know, one of the things that I notice is it's kind of like driving halfway across the city to save 5 cents on your gas bill. Like, okay, yeah, maybe you save $5 on your tank of gas, but if you spend $10 worth of gas driving there and an hour of your time driving each way, what did you really save? So, I'll credit one of our favorite mortgage brokers, Keaton, for that analogy. But, Megan, what are you seeing when you're diving into the numbers for? Let's get into what the average person is looking at. Like, we have a lot of movement in that 500 to a million range. How much money are people actually thinking they're going to save if they wait for interest rates to come down quarter point, half a point, 0.75? Like, what does that look like?
Honestly, from the people that I've had the conversations with, it's really funny. And you use that analogy of driving across, spending, $10 in fuel to save a couple dollars. And when you put it in perspective like that, absolutely everyone's like, of course, that's ridiculous. But I find with such a big purchase like a home, and then you've got the news media, everybody's talking about interest rates, interest rates, interest rates. And if people have their blinders on, that's the only thing that they're focused on. So they hear like 0.5%, 1%, and all of these things. And that's the only thing that's speaking into them. They're naturally thinking, well, this is the voice that's speaking the loudest. So this is therefore the most important thing. Therefore, this is a major impactor in my decision to move. And I find a lot of people honestly haven't even broken down the numbers. It's just, this is the voice that's speaking the loudest. This is the most important thing. And I find, because buying a home, it can be a very emotional experience. Even if you are an investor, I find some investors, they still are. They like to think that they're logical and it's all about the numbers. But when it's news media and all of these people speaking in, it's sometimes hard to decipher the right information. And so that's one of the things that I found is when I actually sit down and write out the numbers, it puts things into people's perspective, and it's not actually the interest rates that is necessarily like the biggest issue.
You know, the funny thing about interest rates is why they get adjusted in the first place. And why they get adjusted in the first place is if the market is too darn hot, well, the Feds increase interest rates to slow markets down in general terms. We all understand this. Well, okay, now that the market is slow, a slow market means it's a buyer's market. So if you're a buyer waiting for interest rates to come down, well, the opposite side of that teeter-totter is that if interest rates come down, the market speeds up, prices are going to start to increase. So even though I think some people are like, oh, interest rates go down, my payment's going to go down, but the price of the home that you're going to purchase is going to start to creep up. So the opportune time to buy is while prices are still suppressed by those high interest rates. That is really the like economist's way of making smart buying decisions, because the old phrase buy low, sell high. Well, prices are suppressed right now. We're in a buy low period. It's a buyer's market in the lower mainland because the interest rates being higher doing what they're supposed to do. If you wait for interest rates to come down, maybe it'll have an impact on your payment, but every buyer who's waiting is going to come into the market that's going to start seeing price escalations.
Yeah, exactly. What's your mentality on that whole kind of date the rate philosophy?
Well, you know, I think it is a really smart outlook because real estate is a long-term investment. The other thing that I would say in terms of that mindset is that often a variable rate interest will outperform a fixed rate interest. I think what's happening is that people have what we call recency bias, where if you locked in a 2% interest rate for, 24 months ago, 30 months ago, you're feeling like a genius. But right now, nobody wants to lock in a 6 or 7% interest rate. Right now, what you want is a variable rate because by all measures and projections, interest rates are going to come down. So the way to have your cake and eat it too, and the way to date that rate, well, the most attractive rate to date right now is that variable rate because you can buy at a suppressed price point. And as interest rates naturally come down in the market cycle, well, your payments are going to come down. And then you get the best of both worlds.
Yeah. Yeah. And it's one of the things I always chat with clients too is it's great that you're pre-approved for X amount, but you need to be okay with what these payments look like in your life 6 months, a year, 2 years into owning the home, and to write that out, figure out what that budget looks like so that, nobody wants to be house poor, nobody wants to be financially stressed, but so that you can actually take the numbers and make a logical decision around it.
Absolutely. Absolutely. So I think that's really good advice that we're riffing off of right here, because people are hearing a lot of different things from a lot of different media outlets. And of course, they're going to try to sensationalize it. But if you go to the oldest, most logical advice, your buy low, sell high, buy in a buyer's market, pick a variable rate when interest rates are going down. This isn't a media opinion. You could take that advice into any market, anywhere in the entire world. That's just basic economics. So if you want to make a smart investing economic decision, these are the factors you should be taking into consideration.
Absolutely. Absolutely. All right, let's move on to our next question here.
Well, why don't we talk about pricing strategies? And the reason I want to talk about pricing strategies is because we spent the first half of our conversation speaking to buyers. And if you're a seller in today's market, well, you're thinking to yourself, shoot, maybe I should be just kicking rocks and giving up and not even trying to sell, because James just said, don't do the opposite of the type of market it is. Maybe I shouldn't sell in a buyer's market. But the reality of the situation is, if you're someone that's thinking about moving, well, part of moving is selling, part of moving is buying. You want to buy in a buyer's market, but that means you have to sell in a buyer's market. So Megan, I want to talk pricing strategy, because for people that are going to be selling in this market, there's a right way and a wrong way to price your house. And there's a pricing strategy that works in different market conditions. In the market conditions we're seeing right here, right now, spring of 2024 in Vancouver, what pricing strategy is winning right now? And the reason I want to ask you that question specifically is because I'm watching you win. Everybody watching, I mean, Megan's a very humble realtor, but she's sold a heck of a lot of properties in the last 3 months. So we want to hear about what pricing strategy that you've been using successfully.
Yeah, I think for a pricing strategy to be successful is I need to understand what the client's goals are. What are you trying to do? Are we coordinating a purchase and a sale, and all of those moving pieces? And then we need to understand that and line up a pricing strategy that makes sense based on the goals. But if somebody is, let's use the hypothetical situation, somebody is selling and purchasing in this market and they want to coordinate those two as close as possible, what I'm finding is working is doing a market analysis and pricing that property maybe at or slightly under fair market value, not these like significantly like 50 $100,000 under list price. That honestly I'm finding is not working. I'm getting notifications of properties that are priced aggressively low, and then all of a sudden 2 weeks later there was $100,000 price increase in that. So that is not a strategy that's working. But figuring out that fair market value, pricing slightly low, and our biggest thing within is marketing, is making sure that property absolutely shines, because that's where everybody is seeing the property first. And so the pricing strategy needs to be in line with the marketing strategy, and we want to get as many eyeballs on that property as possible. We will typically go to market either a Monday or a Tuesday and have open houses Thursday, Saturday, Sunday, get as many people in. The last handful of ones we did that with, the last one we got multiple offers on the Thursday night after the first open house. The one prior to that, we got multiple offers on the Friday. And that's what we're really seeing, because people are able to see value, and we're getting enough eyeballs on the property and enough people coming in that we're able to get that very close, if not above, the sale price that the seller was asking for.
Oh, that's great information, because there's different ways to go. In some markets, pricing it aggressively low gets people's attention. Because the market is balanced buyers, it's almost like the buyers are skeptical of those price points, because we're seeing people think, oh, there must be something wrong if the price is that far out of alignment.
Yeah.
On the other side of the coin, pricing it a little bit high with some wiggle room for negotiating, that's just getting your property overlooked right now.
Yeah.
People are saying that like, that's just not as well priced as the competitive listing. And so people are just naturally gravitating towards well-priced properties, which is why pricing like right at market value is what's getting it sold quickly and effectively, while the properties that are either priced too low or just too high with wiggle room are getting ignored, looked over. And then you end up in that like real bad area as a seller, which is where you end up what we call a stigmatized listing. It's been so many days on market that people just naturally think, oh gosh, it's been 30, 40, 50 days. How come nobody else has bought it? What's wrong with it? There's probably nothing wrong with the property. The thing that's wrong is the pricing strategy. So for those of you thinking about selling, really pay attention to what Megan is saying here and get an accurate market assessment done, and then price at that market assessment in order to get that maximum traction on your price. Of course, listen to what Megan's saying. There's a lot more than price that's going to get your property sold as well. Obviously, good media, good marketing are a huge part of the equation. But, from my experience, great media and great marketing with a terrible price usually results in a property that's overlooked.
Yeah. Yeah. And a savvy realtor representing a buyer is going to say, we're in the driver's seat. And, unless for some odd reason that buyer is, not properly represented, it's a very unlikelihood that you're going to get the list price that you want there.
Definitely. Well, do we have time for one more topic?
Yeah, why don't we get into some investment opportunities? Then we'll run through the numbers and just quickly unpack what that means.
Great. Okay. Well, then the thing about investment opportunities, especially in the Vancouver area, is that everything's an investment. If it's contributing to growing you and your family's net worth, even if it's your home, you've done something that we can consider being an investable move. Now, there's a lot of new changes going on right now. I mean, we've got the short-term rental restrictions. Obviously, that flipping tax is being more aggressively policed and watched. And we're watching capital gains tax increase. So, it does cause us to pause and think, hey, how can I shift my strategy to not only make sense of what the market is doing, but what regulatory bodies are doing from a taxation perspective?
Yeah. So what do you find if somebody wants to get into the market right now? Maybe they've got kind of $100,000 or so to
Mm-hmm.
give or take to play with. They don't own anything here in the Lower Mainland, or maybe let's say they own they have a personal residence, but they don't have any investments. What are some kind of ideal ways to get started?
One of the things that's gotten a heck of a lot more popular in this market specifically are pre-sales. The reason being is because we're in a high interest rate environment, and a pre-sale with the right building could take 2, 3, 4 years to get constructed. So a lot of people are just parking their cash in pre-sales with the plan of closing on the unit once interest rates start to come down and the market's gone a little bit hotter. Now, the capital gains tax and the flipping tax have kind of put in a bit of a different spin on that. But the honest reality is that those two taxes will apply to any kind of property, pre-sales
Hmm.
included. So even though those taxes are unfortunate and they do impact your return on investment calculations, the reality of the situation is you're going to have to pay those taxes anyways, no matter what you're doing. So I don't really want to talk too much about tax because tax is an equalizer. You're going to get taxed when you make money. The government's going to take a piece of it. So I want to focus more on strategies that are market driven and interest rate driven, because those are the things that are going to shift. So I'd say the first thing that we're focusing on is definitely that pre-sale mentality, because developers are also offering bundles of incentives, because as we talked about in our earlier question, some buyers are nervous because of interest rates, and with less
Yeah.
buyers in the market, well, a seller is going to have to add a few more perks and incentives to their offering to attract those buyers.
Yeah, exactly. The last two projects that I was at that just got launched. Lower interest rates were one of the incentives that the developer's offering for the first handful. One of them was the first 100 homes sold, and
It makes perfect sense. I think the other thing that some investors are paying attention to is they're getting excited about growth markets. The nice thing about investing in Canada is that it's a big country with a lot of different markets, and those markets aren't synchronized. So there are some smaller countries and some countries that are just geographically less spread out, because Canada's a big country. And so they have a national real estate market. We don't. It's like saying a national weather. Like the weather in Toronto is not the same as the weather in Vancouver, same as the market. And
yeah,
so right now, the big major markets have been slowed by the increase in interest rates. But while that's been going on, we're seeing the Alberta market still growing, because with all of the new migration to Canada, for one reason or another, Alberta's become the landing and destination for a ton of these new Canadians. And with Alberta being a relatively small population center, it doesn't take a lot of new people to really shift the market from a supply and demand perspective. So the market of the moment right now is Alberta. A lot of people are moving there. The prices are really shifting. So for someone who wants to be a part of a quickly growing marketplace, out of province investing for Vancouverites is very, very popular right now for those who really want to be involved in growth that's happening right now. That being said, I still think that, right now, Alberta's a seller's market. A lot of people want to buy there, and so sellers are in the driver's seat. If you are playing a much longer game, I still think Vancouver is a great place to be right now, because it's not going to be too long. Time is the great equalizer, where the Alberta market will slow back down again, the Vancouver market will speed back up again. And you want to be the person who bought in Vancouver while it was slow, and then when Edmonton slows down in a little while, you want to be the person that buys in Edmonton when it's slow. While that is general investor logic, a lot of people behave the opposite way. So if you're the kind of person that just wants to be in a hot market and buying where there's growth, well, Alberta is the place for you right now.
absolutely. I would agree with that. And that's where I think our conversation starts with is, what are your goals? What are your resources? And we can help figure out, match a location, a market, then a property, and match to that so that it makes sense for you.
Yeah.
So
Well, Megan, let's wrap it up with our last piece here. I mean, for those of you out there who like the numbers, want to stay on top of the trends, and want to economically read where the data is telling us to go, this is for you. Let's talk about the numbers, Megan. What are we seeing in the Lower Mainland right now?
Yeah, so for the month of April, sales in the total Greater Vancouver area, 2,831, which is up 15% month over month, down slightly at 3% year over year. Inventory, so our total listings as of April of this year, just over 12,000, which is the highest since before COVID. It's at 12,491, which is up 16% month over month and 42% year over year. So maybe just a quick question here. This is something, I'm not sure if you guys caught this, but this is the first time like I've seen recently high inventory, and we'll get into the numbers of the sale price, is high sales prices, because usually inventory increases, sales decrease. It's a teeter-totter effect. But what we're seeing right now is high inventory is paired with increasing sale price. So any comments on that, James?
I think it's a sign of the market shifting from buyers back to balanced, and it's showing us that consumer confidence is returning across the board. Usually in an imbalanced market like this, consumer confidence either comes from the selling end or the buying end. So for example, an increase in inventory means that more sellers are confident that it's a good time to sell, versus increase in price means there's more buyers thinking it's a good time to buy. Well, because both are moving together, it's telling us that both buyers and sellers are starting to feel optimistic about the market, which is a great sign. And I think that's really coming on the tail of the interest rate trends that we're seeing. We've had no rate increases for multiple months in a row now, and we're seeing a lot of news about interest rates coming down. So, I think both parties are anticipating a market that's going to be in their favor because of that. Sellers are thinking that buyers are becoming more optimistic. It's a good time to sell. And we're starting to see that early trickle of buyers who are wanting to make that purchase before interest rates start to move and prices start to come up.
Yeah, I think that's very well said. So yeah, we'll get into that. So benchmark sale price, all residential across the board. This is every property type. We're sitting at 1,205,000. So this is up 1% month over month, 3% year over year. So detached single families is sitting at 2,040,000, which is up 2% month over month, 6% year over year. Attached properties, so this is your townhome duplex, 1.127 million, up 1% month over month, up 4% year over year. And then apartments, which are sitting at 776,500, and this is actually down, well, pretty flat. It's down 0.1% month over month, but up 3% year over year. So maybe just our last comment here before we wrap up, like why do you think no increase in apartment sale price right now? And maybe is there an opportunity if somebody is looking at getting into the market here?
Yeah, I mean, I think often in slower markets, apartments are the ones that get hit the first because there isn't a land component attached to the building. So, I think that just represents a historical trend. That being said, I think there is a really great opportunity to get into apartments because we're already seeing the other types of properties start to move, which is a leading indicator. So if you're, again, the kind of investor that wants to buy before the market starts moving, well, apartments are the ones that'll catch up last. So you're seeing the early indicators of what's going to happen next in the apartment space. So, I completely agree that there is that opportunity in the apartment space because that asset type is going to catch up to the other three.
Yeah, absolutely. Awesome. Well, thanks so much for joining us, James. And thank you all viewers for joining us as well. And we're excited to connect next week where we'll have the May stats to talk about. So enjoy the rest of your May and we'll talk to you guys soon.
Thanks, everybody.